With the federal election fast approaching on the 21st of May, we're going to look at what the major parties are promising, what it means for first home buyers and housing affordability. Now, in this video, we're purely looking at the policies and how that might affect you, what it might benefit for you, and how each party differs. So Jaden, let's dive in, starting off with the Liberal Party.
Yeah, so these guys have been beating the drum pretty hard, mostly around the home guarantee scheme, which is the first home loan deposit scheme, just kind of rebranded basically. And that's where the government acts as your guarantor. So they've come out and said, the Liberal Party have said that they're going to triple the number of scheme spots for existing homes to 35,000. They're also kind of copying one of Labor's policies, but incentivizing the supply of new homes in the regional areas. So they're going to allow 10,000 low deposit guarantees. So it's the same scheme, but it's just in different postcodes. So out of the metro cities, in the regional areas. The interesting thing with this though, which is like a complete move, or step change a bit, is it's actually including non-first home buyers and also permanent residents in the regional areas. So if you're trying to buy a home and you're outside of, you're in Gippsland and that sort of stuff, there's a bunch of postcodes that are included. It's pretty much out. So the metro, it's going to be huge. So that's going to be great. There's a doubling of the number of the single parent scheme. So that's the 2% deposit scheme, which is pretty good. It's got different price caps, so just look out for that. And they're going to increase, I guess this was probably the best feature I'd say of this, other than obviously giving out more spots, they're increasing some of the property price caps because obviously there's been a pretty wild year of property growth. So in Sydney, for the first home loan deposit scheme, it's going to be 900,000, Melbourne 800, 700 Queensland, and then with the regional areas, it's different caps. So I think, some pretty good policies. It's kind of expanding on the existing ones, so they're trying not to do anything too crazy, but yeah, pretty interesting.
Yeah, I think some good policy changes here, especially around the price cap limits. Jaden, I know in the past we've had a number of clients that have taken up this scheme. What has been your experience on it, and where do you think that they've done quite well in the changes and some things that they could have done better?
Yeah, I think the biggest challenges have been the number of spots. So the 10,000 spots sell out like hotcakes, basically. They're gone before you even get it. So it's good that there's more spots. Is it enough? I guess we'll have to wait and see. I'd say it's not going to be enough. The price caps are good. Again, though, in Sydney, like it sounds crazy, at 900,000, it's still, you're not getting a lot realistically. So it's going to be useful, but could they have done more? Possibly. But probably the other thing as well is some of the income caps. Like I think these are still pretty fair. We've had customers who might have a combined income of just over $200,000, and it's disappointing that they'll miss out on that. Because just with the cost of living and whatnot, they're not really factoring in wage growth and things that have happened there because that's stayed the same. So I think there's good and there's bad. If you're looking at getting into the market, it's obviously a good. It's good to have realistically, and it gives you the opportunity to get that step in, that foot in.
Yeah, I think for the main scheme here for the first home guarantee, which is the old first home loan deposit scheme, I would have loved to see this open up to non-residents, so permanent residents, non-citizens, instead of just the citizens that they're asking for like they did for the regional, where they're going for permanent residents as well. So that's probably one thing I would have loved to see expanded on a little bit more as well.
Yeah.
So let's have a look at Labor's policies and what they're looking like for housing affordability.
Yeah, so starting on the first home loan deposit scheme, so Labor have confirmed that they're going to continue with the current first home loan deposit scheme that the coalition put in place. They didn't say if they're going to put any more places for the existing properties in place. So that's potentially, if Labor get in, going to be limited to 10,000 spots. They did, however, say that they're going to make another 10,000 spots available for regional applicants. And they're actually going to review the price caps on a 6-monthly basis. So I guess if the market were to continue how it is, you could assume they might actually give a bit more dispensation for if prices keep going nuts. Hopefully, they're not, but wait and see. And the income and stuff, the same sort of thing. So Liberal and Labor, first home deposit scheme, or the home guarantee scheme is pretty similar at the moment, except for those price caps. And the expanded numbers. The big thing that Labor came out, we did a video on this late last week, was the Help to Buy scheme, where the government's potentially, Labor is potentially going to take equity or home ownership in in properties for first home buyers. So on an existing property, they'll potentially provide up to 30% deposit equity, and you'll borrow the rest. or on a new home, it's 40%. So it's actually pretty huge because it means you can get into the market. You still need to have your own 5% deposit, but it means, potentially your mortgage is going to be much lower because you're only borrowing sort of 60%, unlike a lot of first home buyers. With the home deposit scheme, you might be borrowing 95%, so your payments are lower. I think, Nathan, some of the downside on this one, though, is probably the income price caps like we covered on that last video.
Yeah, I think it's hugely disappointing to see that 90,000 for a single. I get that makes sense. But then from 90 to 120,000 for a couple, I really don't see how they got to that. The other thing I saw there is that they are going to limit it once again to citizens. We really want to see this open up to more home buyers. Yes, there's a lot of citizens out there that do benefit from this scheme, but simple fact is when we have a couple where one person's a citizen, the other's a permanent resident, they don't qualify for these schemes. So that's a little bit disappointing there that this scheme is only going to really benefit a very certain segment of the marketplace. The other thing also that I saw is that it's once again 10,000 home buyers. So it's probably not going to make a huge dent and help a massive amount of people. What we found at the start of the year, we had the first home loan deposit guarantee spots available from the 1st of February, 10,000 spots taken up in just under 2 months. So it does get used up pretty quickly as home buyers are made aware of these opportunities and they are looking to make moves quite quickly. So that's probably the only other thing I see there as potentially being a downside. But I think it's a huge win, potentially one that some home buyers out there can really take advantage of.
Yeah, so the other one is, like I mentioned before, their regional first home buyer support scheme. So this is pretty much the first home loan deposit scheme for regional Australia. So, you need to be outside of a capital city, be an Australian citizen over 18 for this scheme. So I guess that's probably a big difference between Labor's scheme, which is only for Australian citizens, whereas Liberals said they're going to open up to non-citizens. Same income caps as before, and like it's different. It's obviously regional areas, so like Sunshine Coast, Gold Coast, Geelong. You just need to check the specific postcodes. I guess you can check that out, based on how it is at the moment. So I think like Labor's big thing was probably the Help to Buy scheme is realistically what they're sort of looking at.
Yeah, I think the two things I see as the major differences here is Labor's got the Help to Buy scheme, which is a little bit different where you've got the shared equity, and the Liberals have got the first home loan low deposit scheme that's moving to the home help. What's it called? The
home guarantee.
Home guarantee scheme. Effectively, that one's just going to have more spots, so 30,000 spots and higher price cap limit. So that's the major differences I can see there, unless there's anything else, Jaden?
Pretty much it, yeah. So that's, interesting on that. There's a lot of kind of counter arguments, even with Labor's housing scheme. The shared equity is open up for any home buyer. So you just basically don't need to own a property at the moment. It's not restricted to first home buyers. So some of the punters have said sort of, it could create more competition. It could make it harder, but I think realistically, like it's limited to 10,000 spots. So whether or not that's going to sort of have a massive impact on the market the first 12 months remains to be seen. And the regional, scheme is obviously a win for anyone that's sort of looking at buying outside the capital city. If you're doing work from home, could be a really interesting one to try and take advantage of. Looking at the Greens now, they've got like a pretty interesting policy, or a couple of interesting policies. With their policy, they're doing a shared equity scheme. They're going to have 125,000 spots, but they're going to do it where basically you only pay a maximum of $300,000 for this house. You'll pretty much pay your rent to them to pay off the house, and when you want to give it back, you can sell it back to the government. So how it works, you pay a 10% deposit to secure a home and make repayments each month like you would a mortgage. Instead of paying the money to a bank or landlord, you're basically buying the home. So you're paying $300,000 off progressively. If you decide to leave, you can sell it back to the government and take the money with you, which you can put towards your next home. So it's like buying a home, your investment will grow. So presumably it would be probably similar to like when you buy in a retirement home, they might set kind of the price on that because you obviously can't just sell this on the open market. It has to be sold back to the government. So I guess they're gonna have to work out a way to index that with property price growth and whatnot. Still need a 10% deposit, and I guess with only 125,000 spots, you're gonna be limited on that, but obviously a good one to help in the market and something different, which is nice to see that. So I think that's not a bad policy. The other one, which is super interesting with the Greens, is they've pledged to wipe student debt and other and offer free education to balance out the rising cost of living, which is, kind of something that I think was proposed in America a bit. But, Nathan, I'm sure you've seen this with home buyers, like removing HECS will help is huge. It could be huge help.
Look, I think that's a brilliant policy in itself. I don't know how they're going to make that happen, but if they can make that happen, I mean, HECS is one thing that we do see a lot of the times does reduce your ability to borrow. So, if you're on $100,000 and you've got a HECS debt, doesn't matter how much you owe. If you owe $1,000 or $100,000, the bank assesses it based on the minimum threshold of repayments, which is around 6 to 7% of your income per annum, which does reduce your capacity quite substantially. So one that we see as a massive benefit, should we be able to get that done, that'd be awesome.
Yeah. And the last one, the United Australia Party, it would be hard pressed not to have seen some of these billboards flashing around a maximum of 3% interest on home loans. So they're saying, I think the billboard reads over the next 5 years that your home loan rate will be capped at 3%. They've got a couple of numbers here. I actually tried to research this and just see where they found that at over 4% interest rates, over 60% of Australians will default. I think if that was the case, the bank's going to be in a lot of trouble. But do your own research. I think principally it's a pretty wonderful idea of having your home loan rate sort of capped at those low, pretty much historic low rates of 3% over the next 5 years. Practically, like I said, probably check it out. There's a couple of economists that have come out and said it's going to be pretty hard to kind of regulate the banks, force them to kind of keep interest rates on that hold. How's the government actually going to pay for that when it's like trillions of dollars in debt, potentially? So, I think principally as a home buyer, that sounds like an amazing idea. Practically, wait and see what happens, but it's obviously still could be beneficial for home buyers out there. So it's not a bad scheme.
So that's it for today, guys. Here at Hunter Galloway, we're based in Brisbane. We help home buyers across Australia. So if you're needing assistance with finance, simply visit us online at huntergalloway.com.au or call us 1300 088 065 and we'll see you next time.